Hey everybody, Tom Bullington here with Coldwell Banker Realty again. It's January 2nd, 2026. Hope all of you are doing well and doing great in the brand new year. It's Friday, in case you have lost track of exactly what day it is. It's Friday. And as the new year starts and as we get through the holidays and all of that, wanted to talk about interest rates and specifically mortgage interest rates for home purchasing. So I get asked a lot, and I get asked this a lot during the holiday season, is when are interest rates going to come back down? Well, 4 years ago on this date, they were at 3.2. Okay. Now they're at 6.2. A year ago, they were at 7.2. So we're making good progress coming back down. I don't know that we're going to be ever back down to the 3.2 or even below 3% that we were back during the COVID years. It could happen, but I don't think that's going to happen. Historically, these are relatively good interest rates. So in the fives and the sixes is relatively good, historically speaking. They've been up as high as in the 19 or 20 range in the past, in the far past, 45, 50 years ago, they were up there. So 6%, not too bad. The caveat is, however, is that people are not making as much money compared to their whole household income and compared to their expenses as they were 30 years ago. When my first interest rate was 8.38, that's great, but it was a smaller percentage of our take-home pay than today is. So your mortgage is going to be a bigger part of your overall expenses. Health insurance is that much more expensive. Food, fuel, everything, vehicle, whether you're leasing or buying a car, all of those things are more expensive today, and it has not, your cost of living has increased while your salary has not gone up as quickly. And that's just the way it is. So when you talk to young people today and they're like, well, boy, we missed that 3%. It's like, yeah, 8, 9% used to be really good. Now you're down at 6.2, but you're not making as much compared to what we were back in the 90s with interest rates even higher. So um, sure, it's 6.2. That's great, but only if you can afford a down payment that's big enough to get your payments down to a reasonable level. So right now, what's happening a lot of time with first-time home buyers, which I barely have any first-time home buyers any longer, they are saying, I'd much rather just rent and wait it out and wait for the interest rates to come back down. So they're going to rent for about as much as their mortgage payment would be, or even less than what their mortgage payment would be. They just don't want to be tied into a 30-year fixed mortgage rate and have it be way more than they can afford. So that's kind of where we are today. So, like I said, 6.2% is the standard 30-year fixed mortgage rate. 5.75 is FHA. We are talking about a VA for 5.87, and FHA right now is a 5.85 for a 30-year FHA loan. So, of course, your rates may vary. You may be able to buy down the interest rate, ask your lender about that. The other thing, too, is if you are looking at um, doing some rehabs. There are some rehab loans that are available out there. Talk to your lender as far as what your credit rating is, what your score is for credit, as well as what your employment record is, and how much money that you're making now compared to maybe a few years ago. Your ability to buy a house and lower the interest rate may have improved even in the last 6 to 12 months. So that's something to keep in mind too. But right now, 6.2 is about where we've been for about the last 2 weeks. And we'll see what happens. What's going to bring it down? What's going to take it up? The economy, the overall economy. So we're talking about different conflicts around the world. We're talking about tariffs, talking about inflation. Are there things like that are going to impact the interest rates? Is there going to be a new chair of the Fed? Yes. all these things in 2026 that we cannot predict. It's very unpredictable right now, but we'll see what happens with the federal administration. We'll see what happens with the Department of the Treasury. All of those things, politics aside, it's a very volatile time right now. So, 6.2, about as good as you're going to get right now. This is the range for the last 12 months. It's been as low as 6.13, but we were up to 7.26. So it's about a point lower than it was at this time last year. So if you have any questions about this or anything else regarding real estate, looking to buy or sell, please don't hesitate to give me a call, 651-402-6356, on the web at tombullingtonhomes.com. Again, Tom Bullington, Coldwell Banker Realty, serving both Minnesota and Wisconsin. Give me a call. Talk to you soon. Bye.